Hello traders, you are welcome back to the Forex Geek channel. All right. In this video, we are just going to be talking about an intraday trading strategy that combines the relative strength index with Fibonacci trading, Fibonacci pivot points. Okay. It's a powerful combination for identifying high probability trade setups. So this strategy is perfect for Forex, stocks, and indices and helps traders to identify strong support and resistance levels using Fibonacci pivot points. And it also helps traders to use RSI to confirm overbought and oversold conditions. Finally, it helps traders to improve entry and exit timing for better trade execution. Now, if you are looking for an effective and easy to follow intraday strategy, then this video is for you. All right, stay tuned because we'll also go over some examples to show how this method works in the market. All right, now before we get started, make sure to hit that like button and subscribe to the channel for more powerful trading strategies and market insights. Okay, let us jump right into it. Now, let us start with the two key indicators used in this strategy. The first is the RSI, all right, the Fibonacci, the relative strength index, pardon. Sorry. Okay, so this is the RSI, right? It's a momentum indicator that measures the speed and change of price movements. Okay, it ranges from 0 to 100 and is commonly used to identify overbought and oversold conditions. Now, a reading above 70 indicates overbought conditions, potential selling opportunity, right? That's what it means. And then a reading below 30 indicates oversold conditions, which means potential buying opportunities. Okay? Then now, talking about Fibonacci pivot points. Pivot points are actually widely used to identify support and resistance levels. Pivot points, Fibonacci pivot points are actually calculated using Fibonacci ratios, all right, which help determine where price is likely to reverse. Okay, now we usually have the pivot points, resistance levels and support levels. So I'm going to be adding the Fibonacci pivot point indicator to the chart right away. Now, this is actually a custom indicator. So if you do not have the indicator on your platform, you might need to download it from an external site, right? You have to download it from an external site and and add it to your indicators library. Okay, so now the pivot point, the PP, which is the pivot point, is the central level acting as a key decision zone. All right, then we have resistance levels 1, 2, 3, and we have support levels 1, 2, 3. All right, the resistance levels are potential areas where price might reverse downward, while the support levels are potential areas where the price might reverse upward. Okay, so by combining the RSI with Fibonacci pivot points, we can create a good trading strategy that helps us filter false signals and identify high probability trade setups. So now that we understand the indicators, let us go through the step-by-step process of using this strategy. Okay, the first step is to identify key Fibonacci pivot levels. So you start by plotting the Fibonacci pivot points on your chart, or just use the indicator. All right, then you look at the pivot point level, the PP level. This acts as a key price decision point. You identify the nearest support, the S1, S2, and S3, and the resistance R1, R2, and R3. Then you use your RSI for confirmation. Check the RSI value to see if the market is overbought or oversold. If the price is near a resistance level, for example, and the RSI is above 70, this suggests a potential short trade. Okay, But if the price is near a support, as in this particular scenario right now, we can see that the price dropped to the S1. In fact, it came between the S1 and the S2, and it is now going back up. And then we can see that the RSI dropped to the 30 level, right? It dropped below the 30 level and is climbing back up right now. So in that situation, it could indicate a possible buying opportunity, and you can see that the price is already going up. Okay, so the third step is to enter the trade with proper risk management. For a buy trade, you can enter when the price touches the S1, the S2, or the S3. All right, and then the RSI, of course, has to be coming up from the 30 level. All right, the RSI should be coming out from the oversold condition, okay, before you enter your buy trade. Then for a sell trade, you can enter when the price reaches the resistance, R1, R2, or R3, and your RSI has to be above 70 and coming down, okay, signaling overbought conditions. All right, then for your stop loss, if you are in a long trade, you can just set your stop loss below the nearest support level and target the nearest resistance level. All right, then for a short trade, you can place your stop loss just above the nearest resistance and target the nearest support level for your take profit. All right, always maintain a good risk to reward ratio of at least 1 to 2. If you are risking $1, the potential profit target should be at least $2. All right, to ensure better trade management. Now, before you start using this strategy, here are some common mistakes that you need to avoid. The first is trading without confirmation. Now, just because the RSI is overbought or oversold does not mean that the price will reverse immediately. So always wait for confluence with your Fibonacci pivot points. All right, and do not make the mistake of ignoring market trends. If the market is in a strong uptrend, you know, a short trade near your R1 might be too risky. All right, so instead look for buying opportunities near support levels. Okay, and also do not make the mistake of using tight stop losses. Pivot points act as support zones, not exactly price points. All right, so give your trades some room to breathe to avoid getting stopped out early. Finally, do not make the mistake of forgetting news and market events. Economic data and major market events can lead to high volatility, making pivot points less reliable. So always check the news before entering your trades. Okay, so that is it, traders. Intraday trading with RSI and Fibonacci pivot points is a simple yet effective strategy that helps traders identify key support and resistance levels while filtering out false signals. If you found this strategy helpful, make sure to hit that like button and subscribe for more in-depth trading strategies and market analysis. Let me know in the comments which indicators or strategies you want me to cover next. Thank you for watching, and I'll see you in the next video. Happy trading.